All right, just checking Twitter. Looks like we are live, back for episode 23 of the Proof of Beauty podcast. Another happy hour edition on a crazy week. I'm sure I don't need to recap the events of the week. There's been plenty of people who've done that for us, but what we wanted to do today is just kind of give you guys our voice and chat a little bit about some of the conversation I feel like that is lost in the chaos of all the conversation today around, FTX and Alameda and the whole catastrophe around that. And I know there's over 170 projects actually affected, and that's just what we know of to the FTX disasters. So obviously we come at this with a sensitive heart in the sense that we're pretty aware of the disaster that this causes in the industry. And the ripple effect is very real. And we've seen this time and time again. It's unfortunately one of the whims of the bear market, as we know. It just happens to be a very large example right now. And so with that, Dave, I'd love to kind of turn the convo to you and hear some of your, initial thoughts on the events of the week.
Yeah, to first comment, it's incredibly hard to see certainly some individuals that have been impacted by this. Um, you know, uh, I think in a risk parameters assessment of any financial opportunity that you endeavor to do. Oh, give me a second. Doggo just came by.
Nope, no problem.
I'm
Hello,
gonna
Duggo.
put her back. Put her back.
No problem. Yeah, the risk parameters around FTX are certainly getting more and more questionable for our audience. Hey, Dave, I was just saying, the risk parameters are becoming increasingly questionable around FTX, right?
Right.
But go ahead. What was your thought?
Right. I think it's one of those interesting notions of like there's a lot of different risks when you participate in like financial products that you want to like hopefully make an upside from.
Mm-hmm.
And I think like when we had like these things like Luna and all those things, it's like a lot of those risk parameters were pretty apparent to the point where like it was you kind of have to know that like this is a game of like getting in and then getting out at the right time.
Right.
Where this FTX issue was such a reflection of like a systems risk, like the system failed, not the financial product, but it was a system and its abuse of its own financialization. And I think those kind of risks, systems risk, especially in like the more traditional spaces, is incredibly hard to observe. Like it's a very opaque understanding,
Right.
and obviously we seek and endeavor that through DeFi that systems risk becomes a lot more of a open conversation, a dialogue. Not to say it's like infinitely better,
Right.
but
Right.
it's at least a dialogue, right? So it's really hard to say like we folks that were impacted were like doing poor, like they didn't make a rational decision. In the parts that I felt like this felt a lot more obviously like not to say that other things weren't fraudulent, but this felt really nefarious in the sense that there is in these centralized systems when systems risk is largely a social construct, not like DeFi where it's like a mathematical proof almost. Um, FTX kind of abused that social contract. Well, abuse is not even the right word, to be fair. But it's really unfortunate. It's like one of those things is like you could like the smell isn't that strong enough like months before where you're like, okay, we got to pull. Like, I think the folks that did manage to get out very safely, like I think a lot of folks would think back about this moment of time. It's like, holy cow! Like if I was just 2 days late,
right,
I'd be in a totally different place in my life, right? Like there was this, and then it's like, well, it wasn't like you weren't. I wouldn't observe to say that people were bad investors. like I think Luna, there was a lot of bad investors involved.
Right. That was a lot
As
of
consumer,
gambling, right? Yeah.
right? But this is like, yeah, like you park your money in exchange, and obviously it's not regulatorily very black and white as to what they can do with their funds. being offshore and everything for state citizens.
There's a lot there on the regulatory side that is
Yeah.
truly questionable, and I think it's becoming more apparent. Did you get a chance to look at the tweet I sent you through Discord
Yeah.
regarding their auditing
Yeah.
firm? The first ever CPA firm in the metaverse. I could only imagine the regulatory environment in the metaverse is really, really strict. You know? Right? You know, it gets really, it's a big joke at the end.
It's just I wonder, knowing these guys, if this certain auditing firm money does is there money from SBF themselves? um
Hmm. Good
because it's
question.
like
Yeah.
because I'd feel like, yeah, it could be like they're more in bed together than most people think they are.
Hmm.
Considering that's how like SBF does operate, it seems like it is his pragma of business to
Yeah.
pretty much create his own little like empire, and the empire has a perception of, I guess, of fair market.
Right. Right.
So
This is from me, Kevin. But
hmm,
yeah, I just wanted to make sure I highlighted the tweet referred to. Um, and it just continues to highlight, I guess, like the immaturity in the regulatory sense of the market as well. I mean, you would think that the second largest U.S. exchange would have a bit more a bit more accountability, right?
yeah,
I wonder how much of this is just just literally a reflection of the immaturity of the space with respect to the assets themselves, not really understanding the implications of using them the way they were. I mean, obviously, there's some immediate implications to using your own assets as collateral, but again,
yeah.
yeah,
I find it interesting. So one of the to lean into that point, I've kind of had my own tin hat theory
hmm
that whale money that came with this bull cycle, as in like more like TradFi money, like to an extent, like a lot of those like VC funds, even whatever, like just like BlackRock or whatever, all these like more
yeah,
TradFi stuff. I feel like they came in a little too cocky
hmm.
in the sense that they thought the asset class in our world played to the tunes of what more traditional private equity kind of experiences would sound like and look like.
Hmm.
Because they always had this tone to them, as if like, which still to this day surprises me. Like they're like, you guys didn't speak of, like, especially some of the VC influencers types.
Hmm.
It's like, you guys didn't speak about Web3 until like a year and a half ago,
Right.
and then all of a sudden, you guys present this image that all of a sudden you guys are like the oracles of
Hmm.
of this financial class.
Funny.
Um,
Yeah.
and I think they actually kind of really believe that that's the case of themselves. And I think
Yeah.
that made due diligence less of proper like due diligence, but more so of confirmation bias, of like affirming
Mm.
the
Each other's
belief that you're
perspectives.
right,
Hmm.
that you are smart in whatever
Right.
your thing is, right? And that's really dangerous. Um, and I can see why they're that
Yeah.
cocky, considering I think the last like how many years of financialization most venture has capital has been able to exploit it to, like, quite honestly its maximum.
Right.
um, and they have been able to play the top dog game for a very long time. And I think they came with that kind of mindset into crypto, into thinking that their money, their position, their wealth can do a lot of these things. But then in some ways they fell to the same traps that we
Mm.
as a collective industry, and you could even say commercial retail, like commercial retail access to like securities, like through Robinhood or whatever, even if you don't actually buy the real security, if it's a synthetic. I think this is all like a
Right.
collective
Right.
wave of just like, yeah, we're all really dipshits and stupid. And smart money I think smart money had the cocky problem more than anything else, where I think retail just had the you don't know what you're doing problem.
Yeah.
And I mean, both have a mix of both, to be honest. But
I wonder how much of this though is, I mean, like obviously in the case of this particular exchange failing, this was a case of like you're saying, a systems failure, not necessarily the same kind of situation as say a Terra Luna.
yeah,
But still, I think like there's a lot of people who got involved with FTX because they were either advised to or they trusted the advice,
yeah,
or the direction that somebody else went with their money. And I think there's a large conversation to be had here. And I've been emphasizing this to people I've been speaking with this week, that there's like an ethical boundary that's being crossed often in this space, especially within the world of making financial investments. And that is that we really shouldn't be advising or encouraging people to spend their money on assets when we're not aware of their individual circumstances. A
yeah,
good example of that would be if somebody would walk up to me and ask me what crypto to buy or what stock to buy. It'd be incredibly unethical for me to tell them which to buy because I don't know, one, their financial situation. Do they have kids? Do they have a family? What's their debt like? What other assets do they own? What's their asset portfolio diversity look like? Are they risk adjusted? Whatever, right? There's a lot of components around that. And I think that this is a conversation honestly lost on the space. I'd love to
yeah,
see this continuously emphasized, that we are in no position. And I know I've maybe been guilty of this, and we all have to some degree in ourselves, in advocating for projects that we love, or advocating for maybe not even just the project itself, but the movement behind it.
yeah,
But I think we have to maybe be more clear and distinguish whether we're advocating for a project or giving advice or trying to encourage people to buy into it. And I think there's this sad reality that a lot of the influencers in our space are trying to get people with a little bit of money, a lot of people with a little bit of money, to buy in the projects they want to see succeed,
yeah.
right? And time again, we've seen this fail because of bad actors, because of the whims of the market, because of whatever, right? And so anyways, I just wanted to highlight this point around the ethics of encouraging people to make investments into things they might not understand, right?
Yeah, it's it's like one of those really Sisyphean parts of, I think, a capital market, um, especially with the access that we have towards
Mm-hmm.
retail, and like the information war that occurs on social media to manipulate your understanding of the situation.
Mm-hmm.
Um, I think it's one of those things where like it's kind of like if you look at the situation, you're like, well, crap, the world is screwed up. I think it's more like, well, the best way. I think like we can always hope to do what we can to be our best example of it.
Mm-hmm.
Um, and we could always I think we all slip to an extent. Um,
Yes.
we could get wax poetic about certain
Mhm.
things that we love, and
Very much. Yeah.
and that happens. But it's like, I think having a healthy understanding that this is a very present part. I think for one, it does make you a better investor yourself, right?
Yes.
Understanding the fallibility of your own character.
Yeah. Become so much more vigilant.
And I think for individuals that do have a lot of influencing power, I think it's prudent more that they also know that what they can say and do can even unintentionally um can influence things, and we have certainly
Mm-hmm.
felt that as a
Mm-hmm.
studio with
Oh,
with
certainly.
certain projects, where I've kind of came to the point where I felt like I feel like crypto Twitter has this like manifestation of like, if I have 10 ideas today, 9 of them has to go on Twitter.
Huh.
Like they have to
Sure.
be expressed. If they're not expressed, are they
Did
gonna
they
even
really exist?
right? And I'm of the perspective that of every 10 ideas, you should really only have one of them on, or even none.
Hmm.
Because like I think like you need time, you need things to think out. You need to think about the pragma. Are you
Totally.
it's and sometimes a lot of the conversations just so emotionally charged and if there's anything I think a lot of folks need to realize, it's like money is a very emotional subject to a lot of individuals.
Definitely.
And we operate in a world where we manage to reduce the human spirit and largely create a way to guess, okay, how
Hmm.
happy you are. All I have to do is check the Bitcoin price and like have a pretty good wager to go. It's like it's a really reductive world, right?
It's
And
pretty sad. Yeah. Yeah.
um I just find that people that advise influence in this
Hmm.
world
Hmm.
has I think too many of them thinks they're doing good. They're doing the world a good.
Mm.
Where I don't think in the long
Yeah.
run they're really doing. I think it's more insignificant that they think their act is in the long run, but in the short term it does a lot of damage. Um,
Do you think this could come back to harm people? I mean, obviously we're seeing it can, but I mean more in a legal sense. Like, could it be such that those who think they're doing this good uh, could get hit by the regulatory hammer, or there could be a consequence for being even associated with certain projects?
um, I think that would require a fundamental reclassification of the very underlying assets that we operate within,
Hmm.
in the sense that our assets, the assets themselves, has to have that regulatory ground, which would make it more and more of like a TradFi product, where I think there is grounds to claim that you can't make some comments on the underlying thing that you want to sell or not sell, or manipulate positions. And
Hmm.
my true-blooded heart would want that to be more of a dialogue than just the blanketing of like heavy regulatory context.
100%. Yeah.
Um, but I don't think I don't think our market will self-regulate. That's I don't think
Mhm.
I don't think there's a great self-regulating factor beyond just maybe market culling bad actors, hopefully in the long run. Um,
You just got me thinking, though. You use the word self-regulate, and there's literally SROs, self-regulatory organizations like FINRA.
yeah.
And unless people decide to do exactly what you said, self-regulate, like take self-accountability and take the corrective course of action to try to self-regulate, they won't self-regulate. And it's kind of funny to think about it, because we we would desire that we would self-regulate in a formidable way, but if we actually don't see that result, it's technically the effect of our own lack of action, because SROs exist by that nature, from people who want to take action in an industry to represent it.
Which, yeah, I mean, to even like, I feel like it's one of those weird paradoxes. I feel like the more liquid the market is, the harder it is to self-regulate. So in the sense that like if you want influencers to behave within a certain capacity of empathy and ethics, and they have some kind of capacity to self-manage this situation, the market of influencers are so liquid, right? Like it can
Hmm.
self-form its own cartels that or just be fully independent, right? Like would a VC abide to that? Would a random anonymous Bored Ape account? Like it's so
Hmm.
liquid that enforceability in this liquid market would, or not enforceability, but self-management will
Hmm.
be nigh impossible because
Yeah.
simply the actors go in and out so fast.
Hmm.
And there's such a like almost like a libertarian market of attention that
Hmm.
like the lowest common denominator tends to win, as in like the person who's willing to do everything at all costs to get, well, not at all costs, but like the person who's willing to play the game more than you
Hmm.
if he's unbounded by whatever boundaries that you have, if you were to measure it against like the current KPIs of like followers, attention metrics, right? And it's, I don't know. I just don't. I find it to be like not something that would happen, and a part of
It's
me kind of
yeah,
sits there like embracing the reality that this is the case.
yeah,
And there's certainly good influencers using their influence to educate individuals about the grandeur of the space.
right.
But we're talking minnows in a
Yeah,
world of
in a huge
sharks,
one.
right?
Yeah.
Right.
Hmm.
It,
It just
it yeah.
yeah really gets me thinking about the aspect of like the self accountability aspect, because technically like everybody wants markets to be efficient, whales and minnows, right?
Yeah.
You would hope that if it's required in order to see a more fair regulatory environment, that these whales would use their voice, to create these SROs or other types of bodies that represent certain perspectives in the industry. And if we don't see it, like you're saying, it's kind of unfortunate, because then what we're doing is we're leaving the regulatory gap to the current regulatory bodies that exist, right? And then if we're going to do that, then we have to be very honest about the conversation and about whether or not we're tampering with securities. And
Yeah.
I think, quite honestly, this is a conversation that people get heated about in the space, and people don't want to acknowledge the attributes of crypto that are securities. Some of them have attributes that are securities, but it's not so simple. So I can understand that you would never want to blanket the entire sector with that label. It's funny enough, even with Ethereum, where the Ethereum network behaves like a commodity, but the ETH token had issuance of an ICO. And anytime there's issuance of an underlying asset, that has the principle of a security, right? And so it's interesting because it's not so easily classifiable, but there are attributes of both commodities and a lot of security attributes in the space. And if we're not going to create SROs that are crypto native, they're going to be classified according to those security laws, as they are in a lot of countries already, frankly, including where I live, where there are some security laws governing the way cryptos can behave or you can use your money. And so the the conversation quickly becomes centralized versus decentralized, right? Um, and I think we need to maybe examine what that looks like today, where we're going, what centralized means within the respect of some of these SROs, and then maybe examine a more realistic perspective on what kind of decentralized environment we can expect to see in the future. Because the idea that we're going to there's very few ways you can control this. I will say good luck stopping people with their private wallets, right? But people are still finding ways to tamper within the world of securities. And I can imagine that there will become firewalls or the equivalent of a paywall to keep these private wallets from having access to this world of securities, if we don't find a way to kind of like have a corrective conversation around it. But anyways, just wanted to put those thoughts out there and hear what your thoughts are on that, Dave.
Yeah. I mean, well, for one, I'm not that. I don't think I'm strong enough a regulatory understanding to sway a certain direction.
Hmm.
As I see it, pretty much nearly every crypto asset is a commodity and a security based on the traditional quantifications of what those are.
Hmm.
Um, Again, I think regulations is about preventative actions and reducing
Yes.
possible retail damage.
Right.
And in that lens, there's different ways to attack the problem.
Yeah.
Um, the biggest thing I've always had my misgivings with this whole centralization thing is I don't think crypto hates centralization. It's just they hate it when they're not centralizing it and somebody else is doing it for them.
Okay.
And what I mean by that is I think people think DAOs are just silver bullet in situations
Mm-hmm.
to create entities that by definition of a DAO is apparently decentralized. But DAOs are are a fundamental representation of power aggregation, right? It usually individualizes power to a single address that is a multisig or whatever, and
Right.
they always behave in very power driven ways, and that they're like a very corporate style design, for many DAOs. And so I don't think the conversation has ever been about preserving decentralization. Um, and
No.
on the dark side of this whole conversation, it's like entities create, or even like in the world of NFTs, right? Or in DeFi, they're like, oh, we need to preserve our power, our wealth, and so at all costs, they're willing to compromise on decentralization values to do that. So it's always been not. I don't think it's of the human nature to want to give up power that DeFi, true-blooded DeFi should do. It's just they don't want what they wanted to control to be somebody else, right? And DAOs is kind of just this masquerade of another power entity, just one self-created and I think it's like I do think it's meaningful to hopefully have our own power structures. Like I think there is a future where I think some systems should be decentralized and that they should be structured in a way that there is no backdoor. But then it is probably gonna be like I'd be very surprised if there's not like an NFT marketplace styled conglomerate
Yeah.
where a bunch of folks come together and try to self-regulate
The NFT
what are the
markets.
patterns, right?
Yeah.
And if there's new
Yeah.
entrants to it,
I'd love
then
to see
there's
that. Right.
right. There's probably that for in the way future for like debt product markets. The likes of OV, Compound, they're already like embedded in
Totally.
each other, to be
Yeah.
honest.
Yeah.
Well, I
Yeah.
think that will happen, especially as the size of the market gets to the point where it has to get to. But like right now, since DAOs has just been this capture of intrigue, curiosity, and a crap load of people just trying to make money somehow through a DAO, because there's just such a huge wealth front to it. I don't think that there's a lot of individuals are willing to think a little bit longer in span of time. But then, like to that point, DAOs are a concession that
Right.
you're not being decentralized anymore, right?
Yeah. Yeah.
Because it's just creates such a big avenue for humans to be humans again and aggregate power to be aggregate again. And it's just a medium is on a decentralized network, but it right. So I just don't think it's like a fight for between decentralized centralized. Like things will get centralized. Period. It's just a matter of
100%.
like it's just a matter of how do we want it centralized in a way that we find not acceptable or even approachable. We can sleep at night thinking it gives us what we want.
Right.
And
So on that note of like getting regulated the way we want to, I've been seeing this argument put out, and the idea is basically like using email as the example. Well, what if you had to have a regulated email, right? Which I feel like is a bit extreme, because wouldn't you argue that it is a fundamental right that everybody should be able to control their own bank account keys, but to tamper within any form of marketplace is completely different? And I don't say tamper to operate or to trade or to gamble or to take any form of participation within a market would be fundamentally different than just having a savings account or a checkings account. Like, for example, right now, your bank actually cannot offer you investment products. There are actually walls that exist to keep you from being able to have an investment product within the same place that you have your bank account. And so that's why you got to go to like a brokerage firm, right?
Right.
And so like they're two fundamentally different products. And so like I'm just kind of putting this thought out there because I'm thinking about it. Like it could make sense to see those two different things regulated in a different way. And I don't know how you would ever even begin to regulate private wallets per se. I think that's a pipe dream. But I can see there being regulation in place in markets where you're buying assets and trading assets from any kind of dealer like institution, right? And so I think there maybe needs to be a distinguishment between those two types of activity when we're considering this decentralized versus centralized narrative and the tools we use.
Yeah. I mean, I think it all starts with like token issuance, right? And the contract you start with.
Okay.
And
Yeah.
what kind of grounds of regulations that you want to potentially have backdoors to abide to. Now, DeFi, unlike a lot of TradFi, has this weird opportunity that you can create stuff that will certainly outgrow you. Like it's like designed almost to be unstoppable in every regulatory context because you don't give it a backdoor or you don't do this or that.
Right.
Certainly, there's vectors to regulate them in the sense that if it's a token that has to be traded, the trading entities can do actions of regulation.
Yeah.
Even if that doesn't kind of quite have a vector, like for example, right? Like you can definitely. I was thinking about it even in another context. If you were to create like an NFT with no backdoor, like no blacklist, right? Which is one of my big misgivings about the blacklist, to be honest, is I think NFT blacklisting like that we're seeing for creator fees is a really big vector for a very unproductive regulatory conversation. It just becomes locking things out and not about the nuance of the asset. And I think it puts a burden of responsibility on creators to make decisions upon an audience that is very globalized. And that's a really hard conversation to have for creators.
No doubt.
Right. But I was thinking, like, if you were to do that, say OpenSea hates you and just like knocks you out, there's still like SudoSwap, the Zoras out at the world that are by most principles unstoppable. And then you have a private key or whatever, right? So like,
yeah,
I don't think regulation is about like stifling the problem, or so
no.
It's about like culling retail demand in a way that's measurable,
100%,
healthy,
yeah,
and something that you have enough data to quantify the movements of retail capital. I think on the creator side, it's about education for us to know that what we can and can't do through asset class design, and being more responsible creators in that way. Understanding, like it's that some of these assets, if they do abide to some of these more dangerous properties, that can be really painful for if being manipulated. We should have a better grounds to understand, like, should we do that or shouldn't we do that, or if we're going to do that,
right?
How are we going to be following whatever rules that we either self-form or somebody else dictates upon us?
Yeah,
I don't know. I mean, like, as a studio, I don't think we dive into things that are mechanically that financially sensitive.
no.
And that's not something I'm really quite interested in. personally.
No.
So I don't really see us really touching that ground. But then like indirectly, I see this conversation about regulation also as a conversation of like preserving asset rights, as in like who gets to own assets and the rights that they have, that they choose the regulations that they abide to. And that's comes down to it. That's like one of my big things about the blacklist that I don't feel really comfortable with.
I don't like that either. Yeah.
Right. It just creates a vector where I have to assert an opinion on power within an asset. And that it's not that it goes against Web3 values. It's just for one, at a personal level, it's just not an asset I would like to collect. Like as a collector, I'd be very disappointed if an asset has a vector for OpenSea to make a decision, or a DAO controlled by OpenSea pretty much makes a decision, or an American company has to abide to certain systems where where they're forced into it, where it's just it's not a dialogue. It's just like you got to do it, and it's just really reductive, right? Especially for because in every NFT, every crypto asset sits on the gradient of commoditized and securitized features. So it's like to pretty much give yourself a binary backdoor to an incredibly gradient problem. I think you're just asking yourself to make every problem a black and white problem, because the only way you'll solve the problem is a black and white solution. So
got to get away from that. Like the whole industry needs to move away from black and white thinking.
Yeah, I mean collectively, yeah. And I've been really frustrated personally, even in like the NFT space, because I don't really feel like this was a thing that like the DeFi space felt very strongly about. But just I continually felt this was the case from day one of the bull market in NFTs, where I felt like the NFT world was so much more willing to compromise on not understanding the implications of centralization,
right,
and centralizing at all costs because it preserves their power structures, and preserves their wealth structures.
Right. Yeah.
And you consistently see this happening, right? Like the dialogue about the blacklist, it's about how do you do it, it's about all this and that, but then nobody's really kind of asking the question is like, wow, that's a pretty dang powerful tool.
Yeah.
And it's incredibly binary of a tool, and the conversation of it indirectly is a conversation about regulation. It's a conversation about what these assets can and can't do. And you just gave yourself a backdoor where this conversation can turn into action, and that without even having this conversation in the first place, giving yourself such a freaking backdoor is really dangerous to me.
That is very dangerous. You get my head going. Yeah.
And I think that certainly in the DeFi world, we see the likes of assets like USDC, where there is a blacklist, right? And that, to an extent, is still something that doesn't sit well. But then it also means like they had a much clearer regulatory context where they were issuing effectively an American-based asset. The USDC is an American asset pretty much by the fact that it is controlled under American law. Who can access it, who doesn't. So there's a lot more of a clearer path towards like why some backdoors had to be added or not.
Yeah.
Which to an extent is still a little bit reductive of a conversation, but they had laws to follow to issue such an asset.
Interesting, yeah.
But I felt like DeFi always was willing to like every backdoor that they ever conceived. It's a dialogue, it's a debate, and we have to sit down and say, is this actually something of a backdoor that sure in the short term gets us this and that, but in the long run, is this something that we as can be responsible caretakers of such a backdoor, especially with a regulatorily complex and diverse world?
No doubt. Yeah.
And creating a backdoor is just a huge responsibility, and I don't think a lot of people conceive that. Like creating a backdoor for a blacklist is a huge responsibility.
It's
And
massive. I mean, you're creating a distribution of wealth and you're creating permanent rules, right?
yeah,
Um, and like I like to think that a lot of this space is like anarcho-capitalistic, if you will, at its premise. And but it's kind of funny because that kind of goes against that very philosophical principle. Like the idea of true anarchy is no rulers. It doesn't mean no rules. You want to have clear cut rules, but you don't want to have rulers when you have blacklists. This creates a clear environment where there could be rulers and dictators, and um, the distribution of wealth is no longer within the hands of the community or even at
yeah,
the whims of the capital markets. It's within the control of whoever you would hope would be a good actor.
yeah. And I just feel like regulatory dialogue has just been reduced to that at this point.
Mm,
And it's like, I just don't believe there's a good actor out there, long in the long run, that can
hmm
manage these stores yet, because we just don't have a good enough dialogue.
hmm hmm
So at a personal level, I feel very strongly against the whole creator fees things, and it's like something that would, as a collector, frustrates me that the way we're going to solve this problem is literally creating a power hierarchy that
Yeah.
isn't even quite honestly vetted by the community. It's just, this is how it is,
Yeah.
kind of a thing.
Yeah. Yeah.
um and indirectly, I look at that and I'm like, how is this any different from like an external governmental body coming in and just saying, this is your power structure, we're going to force one onto you.
Huh. Good
um
point. Yeah.
and I don't know, it just feels like OpenSea just kind of set this, which I think it's like a short-sighted concession on the parts of OpenSea to create this blacklist. I think this
Yeah.
conversation was a very serious conversation that we should all have, and not just be like, oh, they're protecting creator rights. Like, no, they're not. Like, it's
No, that's ridiculous. Yeah. They're
um
protecting their own business interests first, guys.
yeah, yeah. And like,
Yeah.
and this is one of those weird things that I really 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 want and hope that, as a conversation, well, for one, game theoretically, these kind of fees are really hard to have. Like, right, like
The
if
game
DeFi
theory
doesn't
here
have,
blows my mind. Sorry, I
right,
was just
like
thinking,
since like
yeah.
DeFi doesn't have that,
hmm hmm
no shit, it won't happen. And creator fees is like a
Right.
construct of our imaginations. If we literally just like decided not to like make central marketplaces and like so centralized in the
hmm
NFT world, this would not be a conversation anymore, right?
Good point.
Because creator fee enforcement is a construct of centralization, um, and
Hmm.
it's a construct of enough bigger players willing to abide to an act of to that thing. And
Hmm.
like I guess this is my 0x part coming out a little bit, but like I keep on thinking back to that. Like, we had a mission statement. It was like, we should have all tokens flow
hmm
freely in the world, and I keep thinking about that more in the sense that I do value tokens to be able to flow freely,
hmm
but I think that the responsibility of creating what tokens and how these tokens flow, based on what the tokens are, like the context of the token, really matters in my head. Um,
Right.
and yeah, I do really do hope for settlement networks in the crypt in NFT world to be a lot more decentralized.
hmm
Um, just because I don't want there to be that kind of power structure, because that power structure almost always invites for regulation,
Right.
in a way that won't be particularly productive.
Not conducive. Yeah.
And that's something that I liked about, like on the subject of self-regulation, I always liked that
hmm
about DeFi. Not that it had the self-regulatory context, but it's such a rule-driven world.
Yeah.
The rules are self-regulated by its own context, right? It
Yeah.
Uniswap works Uniswap ways. There is no protocol fee given to the Uniswap central organization, and
Right.
by that principle, it created its own rules and it abided to it. And even like Aave or Compound, to an extent, have these really strong kind of guidelines to themselves. And in my world, I'm not that like anarcho styled kind of thinking, but like
Mhm.
for that to succeed, I think it's largely in part of like how DeFi would have to like how DeFi kind of self regulates in quotes.
Right.
Some of these
Yeah.
systems regulate, but then our problem is the issuance. I think
And that
token
gets
issuance
back
is a
to the whole
pain in
like
the butt,
secure. Well, I mean,
right?
even just using that word, what the word you use made it a security,
Right.
right? Yeah. And so the whole conversation around issuance, any ICO is gonna actually. I'd love to actually have this conversation within the context of XRP. Do you
Oh yeah.
recall whether or not XRP was deemed a security or not?
I don't think it was
I'm gonna
under
look this
American because I
because it's
remember they
very
managed to
interesting.
settle.
Because there was that whole. I'm gonna look up the SEC lawsuit here,
I
but
don't
there
think
was a
they
whole
won.
argument.
Whatever. Yeah.
What's that?
I don't think it came out of that with like a argument that the SEC liked. So if they didn't like it, then I think it wasn't classified.
Yeah, I think it's really interesting because so far it kind of seems like Ripple is winning the fight against the SEC
Yeah.
on whether or not XRP is a security. This has massive implications for the whole market. And for the last 2 years, I think in my mind has been the prime example of whether or not larger projects are going to see the regulator crack down on them and say that token issuance is the issuance of a security. Um, and then I think about issuance again, even with the context of staking. Like, is
Yeah.
there issuance happening? There's, you know what I mean? The creation of new property.
I think it's well, so in the lens of like damage control,
Mm-hmm.
I kind of see it as like all assets, especially in crypto, probably has an issuance vector to an extent.
Mm-hmm. Mm-hmm.
It's a matter of like, can this issuance process be manipulated in a particularly negative way towards retail? And then from there, there's like a stack rank of different
Right.
issuance models, right?
Right.
And so like ETH to take ETH for example, like for ICOs, I've always kind of had the comment is like the longer the asset performs well over time, if the asset is designed to not have really a lot of issuance post ICO,
Mm-hmm.
it gets small, it gets lower and lower on the stack rank because yes, by I think a very literal definition, it abides with securities regulations, but
Yeah.
like at a damage control level, it's like well, they they can't issue again, right? Like it,
Yeah.
like our bigger problem is assets that are actively issuing, be that ZERP or some
Right.
other assets. Or in the case of like ETH, I found it interesting, which is like what there could be a scenario, and I wouldn't be surprised if a scenario happens, especially in the
Mm-hmm.
far futures,
Yeah.
right? Like currently, you should be earning about 4 to 5% ETH a year, um, which at the grand scheme of things, like issuance compared to Bitcoin is a penny to what it is, right?
Mm-hmm.
But if the asset of ETH grows in value, like how arbitrary is it for them to just say, you know what, we're gonna cut the base fee to 2% because we can, and people
Yeah.
will still come around. And like, who makes that choice?
Good
like
point. Yeah.
right? Like, who decides that the our issuance emission was 4% today, and not 5% or 6% or 3%? I'm sure there's fair market decision making, but I wasn't part of this conversation.
Right.
Certainly, somebody had to make that decision collectively, and it kind of made me sit as like, well, is there a regulatory surface there, right? Like there's a because like
You know,
clearly in ETH's context, our issuance rate is fallible, right? Like it can
yes.
change to the
Mm.
winds of the thing, but like Bitcoin doesn't have that, right?
You're right. There's actually in securities laws different classifications for an organization, whether it issued its security on the point the company was created versus like a company that has the capability to continue to issue securities or new stock. Um, and I don't remember exactly those classifications, but I wonder if that would have any implications here on how maybe or even just be a loose framework we can use for our thinking.
Yeah, that's interesting. Um,
I'm trying to remember even the terms. I'll pull it up later in our private conversations. We can continue this and
Yeah.
maybe bring it back next week if we see value in it. But
Yeah, it's
there,
not something
yeah,
I'd be too informed enough to even frame a mind or conversation about. Um, hmm.
it's just yeah. I've just in my own study been noticing that um, because there's all these different forms of financial intermediaries, the regulation just gets more and more complex depending on the route you go within the distinct types of intermediaries. Into what you were saying, like the type of issuance that took place, or maybe the rate at which issuance took place, or whatever, those different variables, they do actually in the real financial markets get taken into consideration within how that company gets treated. And so when I hear these things, part of me just wonders like, um, if maybe the space needs like a more gentle push towards like financial literacy in the terms of the finer details, because I think there could be a lot we can draw from that could even add to this conversation if we were
Yeah,
maybe aware of those finer points, right?
yeah, certainly. Um, yeah, I mean, like, what, like, you take a step back, it's like the miracle of the whole crypto thing wasn't we solved the issuance thing, where like, what is a financial asset thing?
Mm-hmm.
I think we reduced the regulatory surface,
Mm-hmm.
made the job for regulators easier. Why? I don't really think a thing like Uniswap or OB needs regulation.
Right.
Um, and in that way, you couldn't say that about the Nasdaq or about the CME group selling commodities futures. I think those, by
Hmm.
their legal constructs, had to be regulated based on the fact that there is fallibility within
Mm-hmm.
their models of business.
You know what surprised me
Um,
though to what you're saying? The
yeah,
NYSE is an SRO. So even the New York Stock Exchange is a self-regulated entity. And perhaps the interesting thing is you always think, well, like obviously the people who have the greatest interests within their own interests are going to try to participate in forming those regulations, which
right.
is where it can be fallible. But
Yeah.
it is interesting to think that that is another
So
opportunity for self accountability.
I think what is interestingly different in that surface compared to, say, Uniswap, even V1, V2, V3,
Oh yeah, yeah, sure.
is the construct of the actual liquidity,
Hmm.
the facilitation of the financialization that the financial access it offers. That part, by all principles, is not controlled by an entity.
No, you're right.
Uniswap can't step in and freeze a book, right,
Right.
and say liquidity stops here.
Bless the smart
Um,
contract.
right,
Yeah,
and in that way, I think it did reduce the surface still
big time.
compared to
Yeah.
uh, more centralized system models of access. Obviously, the DAO is a whole massively separate conversation that
Yeah.
you can go on and on about, and I don't frankly know by any means what the DAO is actually doing, at a day-to-day level at this point.
Maybe see our earlier episodes to hear our musings on that.
Yeah,
I spent a fair amount of time complaining about the DAO structure, I feel.
yeah. But yeah, it's like I do think we're on the right track within crypto on creating more services that are in lack of need of regulations. I think that's a productive step in financial advancement and the innovation of finance. But then I'm willing to concede that at least even within the constructs of a blockchain, there's no ways to solve some of the regulatory surfaces. I think maybe there's
Right.
a fundamentally new paradigm for finance that can maybe do something that I can never think of right now. But like issuance regulations of the continual change of a protocol, there's a few things that, simply put, they are they have regulatory surfaces, and crypto
Right.
just doesn't have any better of an answer than I think Web 2 has.
Right. Right.
um, and for me, it's like we can't, as creators, we can't be overly blunt about these surfaces,
Right.
and that we gotta kind of be responsible operators. And it's such a complex conversation, and I think as creators, I think we do ourselves we do a better job if we get. I think if creators get more financial or get more asset literate about asset creation.
Sure. Yeah.
I do think that's a really good thing to do, and I think
Yeah.
it starts with creators because I think a lot of the damage comes from issuance models. And that's largely part of the
Right.
responsibility of a creator to design around.
I On that note, like I will say, like I respect the hell out of anybody who's pushing EDU right now in this space. Like those are the
Yes.
people that are really creating safeguards and onboarding users in a safe manner. And not only that, but taking like an ethical approach to that onboarding process in a lot of ways, so long as they're not
Yeah.
shilling shit coins in the middle of some course, right? But when I think about those pushing EDU right now, that's
Like
incredibly valuable.
it's also like I think indirectly reflects like there's a lot of basic stuff that we still have to kind of like communicate to every new groundswell of audience. Like
Yes,
I
very true.
think there's a lot of new constructs within crypto that are it's a little bit hard to wrap your head around, like the approval models, um, like tuning. Well, I think some of the most confusing thing to a lot of people is like why is there WETH and ETH? Like why is there
Hmm.
wrapped ETH? Like why is that a thing? Right? Like, but
Right.
for somebody like myself who had to work within that realm of the world of dealing with ETH and WETH, it's a very obvious reason.
Right.
But a lot of this is lost to retail, and
Yeah.
there's a lot of
Yeah.
mismanaged Web3 experiences on dApps that simply kind of like I look at it, it's like, well, that's kind of shady. And
Right.
then on this foundation, which is a shitty foundation, because most people don't really quite understand what they're actually materially doing when you hit sign transaction, and at some
Right.
point something
Right. Yeah.
happens. And the contracts, God knows what is actually going on in them. For many situations, it's like on this foundation, we decided to create very predatory business models.
Hmm.
And
Right.
that's, I think, maybe a reflection of the youth of the space.
Yep. I think so
Um,
too.
but like it's such a shame. Um, I think some NFTs that take whatever percent they do take, and they're so willing to do a future blacklisting, it feels at some point predatory.
Yeah. I
Um,
agree.
and I like not as I say, we had a whole conversation about not shilling. I'm not shilling this, but I was very delighted when I saw companies like Blowfish exist, where they
Right.
create firewalls to help protect users from fraudulent transactions. It's a start, I think, of at least creating preventative solutions that scale.
Right.
It's not meant to prevent somebody creating a bonding curve FOMO mechanic, but it's meant to prevent some of the more low hanging fruits, right? But
Mhm. Mhm.
um, it makes me really think that there's quite a bit more work to do on the retail surface of
Yeah.
crypto.
I
Uh, it was a lot better than a few years
Right.
ago. A lot better by a few magnitudes, but like I don't think I have an answer. I don't think the industry has an answer how to solve it. I think a lot of things can chip at the problem, but there maybe be I think a fundamentally a reassessment of how do you approach
Hmm.
this domain, and I think that's where Blowfish really found exciting because they're like almost conceding, which is a very not
Right.
crypto thing
Right.
to
Right.
do. Like we can see that users don't read their own transactions. Users don't really know what the hell they're doing 99.99% of the time. So we're going to create a company to do that for you,
Right.
which is a really anti
Great idea.
Web3
Mhm.
philosophy, but it's a concession. It's a concession that users are not that educated, and we got to go out and build infrastructure to hopefully minimize it. And I think just to have companies like that is like a step in that direction, where this industry is like, this is actually a problem we have to solve, and to solve it, there's many ways to solve it. Some of it requires a sheer education, or some of
Hmm.
them requires soft preventative action, right? And I found that to be a nice temperature check on the retail side, where the problem is not access; it's actually within the world of so much access. How do we put you on the right track? um,
Interesting. Yeah.
and it starts with education on one surface, but it also starts from blocking a little bit of the really
Right.
nefariously obvious crap away from you, right?
I think that's just like a vital component of creating a safe environment for users, right? Like this, when I think about it, it reminds me of like ad blockers and
Yeah,
different tools that we use in web browsing, virus protectors, virus scanners, whatever these different tools we use to create a safer environment for us to explore the web. I'm curious what other innovations then will come out of that kind of thinking, out of the same kind of thinking that Blowfish did, being a concession, recognizing the lack of EDU in the space, the lack of literacy, but realizing that perhaps there doesn't need to be literacy to an extreme. Like, does anybody really, well, maybe few, understand how the internet works is the classic
yeah.
example, but we all use it, right? And so create a safe enough user environment where the user experience is easy and maybe it
I think
doesn't
a part
matter.
of it is like
Hmm.
not about education, but about branding. It's about like,
Hmm.
I think branding like websites that don't have HTTPS
Hmm.
is unsecure is a good thing. I
You're
think
right. Yeah.
nobody like you ask 1,000 people, nobody actually knows why the S matters. But it matters a lot. Like the
Yes.
secure, like whatever SSL protocol, like whatever that is, it's a
Yeah.
very good thing. But nobody knows, but we branded it as such, right? And that's a really
Right.
good thing that we
Good
did.
point. Hmm.
Like, right? And I think there's a lot of like, it's almost like it's almost like tangential. It's almost like how the biohazard logo was created.
Mm.
It's like we created this so it scares people. We're not going to tell you why it scares you. Maybe thousands of years later, where the culture has fundamentally changed, you still don't understand why
Hmm.
biohazard logo is that. But we're going to
Hmm.
create a mythos. We're going to create a brand around this to make you understand
Yeah.
that this isn't something you want to touch, right? And I
That's a good
think that
example. Yeah.
we could do that within the Web3 brands, where we can start communicating a little bit better. That like there's some things that we wanted to abide to, and
Yeah.
we have standardization, and to an extent, I really do think in the long run that like NFT issuance, like how do you mint them out the door, will become standardized. Um, as we just figure out what's the best way to do it. Like it's like, oh,
Mm.
it's a Dutch auction, oh, it's a free mint, or it's a whitelist KYC, right? Like there's gonna be a few rails, and I think there's
Hmm.
gonna be. I think it would do us really good if we can have like a brand around them and be like, oh, this is a safe and secured, compliant standard
Right.
minting experience, right? And there's a lot of
Interesting. Yeah.
I think there's a lot of interesting like things that we can do, not to educate the whole picture, but like set some implications of brands, like, or set
Hmm.
some implications of understanding. Where like for the longest time, and I was really surprised this was the case, you wouldn't know what the creator fee of a OpenSea NFT is until you
Mm.
actually tapped on it
Yeah.
or even sold it. It's like a masqueraded data point, but
Right.
it's like, why don't you tell me the sales tax of this damn thing, right? Like,
I
um,
remember checking Etherscan for that.
yeah,
Yeah.
and that's like now we actually do see it public, right?
Yes.
And I think that that is not really necessarily like strictly educating users, but like it's, I think, a really good step to
You're
understand
right.
that your relationship with this creator isn't just you owning them. There is a very material impact. If you sell
Mm.
this, they're there to take their change, right? And to put that publicly out there is a step in that direction of educating the incentive management of
Hmm.
the NFT asset, right? And um, I think there's just a lot of little things that this bull market missed out, but that's like me saying bull market things. Bull markets tend to do that.
Hmm.
But in a bearish cycle, I think there's just yeah, there's just a lot of things that we can do, especially as we as an industry coagulate around standards
Mm-hmm. Mm-hmm.
and we kind of figure out like this is how we do business now, kind of a thing. Then we'll start actually kind of hopefully creating the right stigma around certain subjects to not educate them, but to charge them in the right way so they're careful or they're not careful or they're saying, okay, this is something I feel safe around because
Right.
there's
Give
a
people, yeah, those
uh,
indicators to read in the directions they're heading.
yeah, and I think it's maybe a matter of like the space getting more and more mature.
Yes.
Like the fact that we're still having such an active conversation around the social construct of creator fees, I think just reflects that there's still a lot of things that we have to coagulate on first before we brand it correctly.
This is a
Um,
huge conversation, even just about letting markets resolve what markets do, and
yeah,
how do you intervene on somebody else's business and tell them what fee they're supposed to have. And yeah, there's a massive
yeah.
conversation we had around that I think we'll maybe get into later.
Yeah. Not to dwell too deep into that, but yeah, I just feel yeah. I just my whole point here to say is like I don't think education is simply just like sitting there and like using tweet threads and educating the masses. I do think there's a lot of value in that, but I think that yeah, there's there's a lot of vectors to help the problem, and if you're not too defeated by crypto even in this week, and you could come out of it feeling there's still hope in this world, um, hopefully you can see that there's ways to solve the problem that aren't as obvious as writing a literal education thing or that or this. It's sometimes a
Right.
soft power, soft things, and
Yeah. Yeah.
there's
Good point.
a yeah, and I think that's like one of the things that I think a lot of individuals hopefully can take out even out of this whole conversation. It's like stuff is always going to be bad in our world, but like if you come out of this whole thing open minded enough to know that there's like I think crypto does well indirectly is like I don't think there's a space that's more obvious of its own flaws than we other industries because every bear cycle, I think everybody's like crap, like we suck,
Right.
right? And like we can do. I think a lot of people do call for better, right? And I don't think a lot of industries are so in self-destructively and introspective.
Right.
um, and I think it's a healthy thing to an extent in the long run. Obviously, people are hurting and pain
Big time. Yeah.
because of this, but we come out of these things usually. We pick ourselves up as an
Hmm.
industry. We dust off our wounds. We're a little bit tired, but we still tend to still move.
Right.
And there's
Right. Right.
solutions that in the pain we won't see, but in serenity we will discover. And we are in pain as an industry right now. So the worst thing to do is
Yeah.
make your big decisions now, I think, and set yourself
Yeah.
on a path that in peace you realize is a dipshit thing to do.
Yeah. You don't make big decisions in periods of high stress.
Yeah.
That's how you make bad decisions, right? Um, and yeah, to all those who are feeling the pains of the market, I believe, and then maybe it's easier to say this um, than to realize it, but I believe there are some fundamental opportunities to discover these pain points and to, for one, bring awareness to the ways we can address the pain point and add value in the space. But in general, like highlighting, for example, education as we are and the different components around it. Like these are positive things that come out of the discussion from the pains that people are feeling. There's a lot of value to be had, to be received in those conversations. Um, and I think they're just the most brutal, honest, and real conversations we can have, because they're the nitty gritty. They're the things that really affect people, outside of the virtual outside of the virtual realm that we get caught up in,
Yeah.
right?
And this is gonna maybe be a little bit wax poetic here.
Hmm.
I feel like crypto, you just experience the 5 stages of grief just so often. If you
Mm.
really love this world. Um, like I feel like creator fees right now is going through the 5 stages. They're in like denial right now, complete denial
Yeah.
that this is the reality. At some point, they'll actually make the conversation actually productive. Right now, it's just kind of clusterheck of people denying that this is the situation and this is the reality. Even the data right in front of them is telling them
Right.
nobody's paying you fees if they cannot pay you fees.
I mean, it's not enforceable.
Yeah, right.
Come on.
I feel like the whole DeFi deleveraging has kind of started its 5 stages already through Luna. There's a lot of anger here, and obviously this was a very destructive event. But I feel like the collective space has just like, yeah, take it aside. There's a lot of anger still, whatever. But I say this all in a way that like I reflect on my really complicated relationship with this world, and I think there was a comment from a game very recently that I really took to heart. It's like to love something is also to grieve its loss fully, conceding that like if you really like or if you really are passionate about something, like the grieving process of it not being what it is to you, whatever that old construct is like a very literal part of being passionate about something.
Interesting. Yeah.
And I think that like crypto just takes that to the very literal sense, and we
So
call this
extreme.
bull bear cycle. We call them like bull bear cycles, and we give them quantified numbers to measure your emotional health through the price of the asset. But I think in some ways I think of it as like we're a very passionate group of people, a little bit too passionate for our own good. But if we're going to be this passionate, that also means that we have to grieve a lot. When our constructs of our passion are radically misformed and misshaped, and the world comes crashing down on us. I think from what I've seen, from how even smart money looked at FTX before the whole implosion,
right,
there was clearly a glass house being constructed there.
Yeah.
And I think to go through this process of like a lot of people in anger right now or in just gloom and being sad, if you're willing to let the grieve process and come out of this, there's still there's still life afterwards.
Right.
As an industry, obviously there's a lot of people going through more personal pain, and I don't want to as if imply that what I say is directly applicable to that. But I think as an industry, it's like at some point we have to accept almost that this is the freaking reality that like this is to operate within, and after that, let's think about it productively, as in like education. How do we dialogue with regulatory bodies that do want to come in? Conceding that when conversations are incomplete, we shouldn't force an answer. Blacklist token to me is like one of those comments.
Right.
And
yeah,
be more patient about it all, honest to God.
Yeah.
Right. Like take a deep breath. It's like you guys a lot of folks made some good money, and hopefully you didn't lose it all in the bear cycle, and take a step back and just realize that as an industry, there's a lot of big problems that we don't have answers. And without those answers, we're not coming to a bull market anytime soon. Like,
yeah, I have a hard time, like, just to add to what you're saying, there's a lot of data that indicates that until we could even have conversations that are conducive to healthy regulation, there won't be the liquidity to even support what most people want in a bull market.
Yeah.
And these are facts based on real money and how that money moves and the math behind it. And if people want to see the future that we all desire for crypto, it requires that healthy conversation. And I'd love to be able to trust more of the people in the space to lead that conversation. And I don't know who those leaders are right now. Who we should be encouraging to push and lead these conversations.
I don't think we're in a rush to find them, right?
I don't think we're in a rush.
The whole space is too much pain right now. There's no point in finding a leader right now. Anybody's a leader right now.
That's
I think is honest God leveraging the opportunity to extract emotional responses.
Good point. Mm-hmm.
We just all have to be in a cooler mind as an industry. Once it's cooler, I think at least the conversation feels a lot more productive. Like right now, and a lot of fields, it just feels like this is just the cooling effect of a bear cycle where,
Hmm.
and I've said this internally, incentives are being changed, either in a very nefarious way, like FTX,
Hmm.
or in a very subtle way that reflects that reflects reality more than it reflects ideals.
Hmm.
Fees, right?
Yeah.
And we're seeing that we're going to see that also with L2s and L1s right now with like the whole EVM killer movement and whichever ones will succeed and not succeed in that.
Right.
L2s is like we're just seeing a lot of incentives and constructs of passion just radically be deformed and changed,
Hmm.
and we don't even
Hmm.
know what to fill the void in yet for a lot of folks, but that's fine. That's kind of like I like this is the winter. Like this is if you don't feel that, then
Yeah.
I feel like you're not really
Right.
doing the whole winter thing correctly. like
Yeah.
it's
You're right.
like winter doesn't just mean I think a lot of individuals. I see this a lot with a lot of young like newer folks to the whole
Hmm.
investment thing. It's like it's not being happy when your money goes down. That's not how you survive a winter. It's about being introspective. It's about being resolute about your values, understanding what you are, being open minded about change.
Hmm.
It's not just saying like one day ETH will go up and saying that every day to yourself in the mirror. That's going to get you through a bear market. That's just not how it is. Like the bear market will tear you down in the long run if that's the case. Because
Yeah. Wouldn't that be just like also reflecting an unhealthy psyche about how to invest? If you're
yes,
identifying with the markets, it reflects a lot of immaturity in your decision making, right? And so I think this is where the whole premise of like don't invest what you're not willing to lose kind of hinges on as well,
yeah,
because you almost shouldn't be emotionally tied to your investments. But I think that gets so meddled in crypto where a lot of these ideas are philosophical,
yeah,
right? Like Bitcoin, before it's even a currency or whatever the classification you want to use is a philosophical movement, a powerful
yeah.
movement. And so it's funny because people are identifying with the movement and accidentally, I think, losing themselves within the value of that asset, right?
And I think this is like where a lot of folks kind of say like you're a crypto OG or whatever if you survive these cycles.
Mm,
I think indirectly this is what I think because I don't think anybody is born to be a good investor. You're not born with that skill.
hmm.
I think it takes quite a lot of emotional rigor and maturity to get through the gray areas. Like maybe at youth you did something that taught you that, or this moment in your life doing this with your money taught you that, or your first
Hmm.
your full cycle in crypto, right?
Right.
And whatever it is, I'd like to think that everybody who's humble enough in this space will know what can tell you is like we all kind of screwed that up. We all done this mistake before. I think
Yes.
it's a very human aspect
100%. Yeah.
of this process, and I think this is what people mean about survival.
Mm,
Survival, it's about seeing that process through. Like it's kind of like the what do you call it? The passage of adulthood, like getting through those
hmm.
stages if you want to imply
Getting through
linearity about
adolescence.
adulthood. Right,
Yeah.
yeah. And there's some of that also about investment education where
100%.
you know and I believe that there's a difference between lessons and being taught something. Like you can be taught something but you don't get taught conviction. Lessons teach
Mm,
you conviction because they teach you the stigma of the pain, right? If you
nice.
hopefully if people have made mistakes with their financial well-being or emotionally reacting a certain way, those lessons will give you the conviction to not do that in the future, right?
Wow. Great point, Dave. Yeah.
And that's kind of how it goes because we have both worked certainly with a lot of individuals,
Hmm.
be it through the London DAO or through the other institutions that we've been
Everything.
affiliated
Yeah.
with, where we certainly have. I've had moments felt like a lot of individuals tell me, like, it feels like you're so, in quotes, mature, which I really don't subscribe to. It's more
Hmm.
just like, it's like, no, it's more like on the journey of managing money and your own wealth.
Mm,
We all made these mistakes. and you're
Big
just
time.
on your journey a little early now, right?
Yeah. Yeah.
And your goal now is just to get there, right? And if you're a smart person, it may be faster, and if you're not very introspective, maybe slower. Who knows, right? Like like who knows what gets you there? But you'll get there if you go through the processes, because you
Yes.
got to get the comeback. You got to be tempered by that kind of thing, because I think a lot of people, if you sit there, you're reading all the risks of crypto
Hmm.
and like rationally assess it. I think the conclusion most people would get if you rationally do it is, I'm not touching crypto.
Yeah, it's too risky.
Right.
If you were to do it on a risk adjusted basis, you'd probably come to that conclusion.
Right. But then the people that do crypto, it's like, no, it's like we're usually not that risk driven of an individual. Clearly we are willing to undertake some amount of risks.
Right.
So, but that doesn't also mean that we got to learn what risk is to us, right? And so to come bring this all together, it's just like this cycle of money being mismanaged and whatever. It's one of those processes that if you wanted a market like ours with the risk
Yeah.
parameterization that we have, indirectly this is kind of what we signed up for.
Right.
To operate within this industry. But then if you signed up for this, I think you are also signing up for the inevitable conversation, hopefully the productive conversation on regulation, on how do we
Yes.
manage the chaos that is us, because
That
clearly the risk
summarizes this.
parameterization is really, really hard to
Oh, yeah.
measure. So
Yeah. I was just thinking like that's like a good summary of the whole conversation. If you're going to be
yeah,
willing to participate, you must also anticipate that regulation is on its way. Yeah, there's a couple different thoughts that come up there, but yeah, I'll let you.
yeah, I mean that's the thing to me. It's like I think there's just too much denial in this industry, especially in the bear cycle, in the bull cycles. People are not willing to accept how many things are just fragile constructs.
Right.
The fragility of unregulation is just. I think people think that's way too, like something that like they're willing to fight at all costs. Like
It's a losing battle though, because I mean, even in capital markets today, regulation doesn't not make it a free market, right? Regulation makes it safer for the retail consumer. That's the goal, right?
yeah,
And I would love it if there were policies in place that protected the average person who put their money with FTX, right? But there probably isn't going to be that kind of safeguard. And so,
like
yeah,
you can
again,
even bring
massive
this
denial.
conversation to like the whole NFT world. I think free mints are genuinely like the scourge of the NFT industry, because it just was such a poorly mismanaged incentive mechanic, right? And if such a regulatory body was to exist to want to help safeguard retail, I think they'd seriously consider culling free mints, because they prey on, they're very predatory on FOMO mechanics of how markets are driven. They prey on people
right.
seeing this collection go into the top 10 approved of like OpenSea's 24-hour volume and making a pretty change out of that without giving really a material value of the project. And that's just really predatory, right? And very damaging to the retail. In part, that's also where I find myself really happy that Creator Fees is an actual like conversation and not a fucking social construct that we all have to follow. It's an actual conversation, hopefully in the long run, not now, but in the future.
Yep.
Because it's a conversation about culling and creating good incentives around creator teams. And it's just not been a conversation we've been having at all as an industry. It's like, why does Tyler Hobb deserve to get 10%? Like, the conversation is literally reduced to, he's an artist, he makes art, let's support an artist. I was like, if the conversation is about support, how much support is support? Like is he making $8 million or $20 million
So
dollars. Like,
I wonder how much of this we even need to intervene on. Like, because when I think about free markets, if you're offering a business offering and people are like, I don't want to pay for this, naturally people aren't going to pay for it, right? Or very
yeah,
few. And so I think about it. I'm like, I wonder if we just focus more on having a healthy conversation instead of trying to make corrective action right now.
I
It
think
would in
that's the
turn
thing. I don't
resolve.
think there's actually ways to correct it. It's just like, let's just have a free market play itself out
Hmm.
in a really educated way, right?
Right.
And the
Right.
market will, I think, play itself out in the direction of OpenSea realizing they're going to lose a lot of money
Yes.
enforcing creator fees.
Right.
Um, and at some point, the conversation just becomes something else, right? And like even like for us, right, internally, we've been having a conversation about tipping for a really long time in the context
Yes.
of other projects. Like, how do we take the culture of Twitch or even like a Patreon where
Yes.
you reward content you like, but you're not necessitated to do so as a way of supporting artists. Like by that principle, secondary fees is doing the same thing as that.
Right.
But secondary fees just is literally a forced upon construct to
Mhm.
you, which
Right.
does not feel like to me aligns with a lot of values. But again, I'm not gonna table that conversation. Um,
Yeah, I'd love to continue that one. Maybe even next week, it could be something we talk about a
yeah,
bit more. As I'm sure we'll continue to see this conversation evolve, and to those listening, I'm sure you guys are seeing it as well all around Twitter. You can't really be involved in crypto Twitter and not uh, be forced into the conversation right now. But I think more than anything, it's important to just hear the perspectives right now, because there's so many different perspectives here. You have it from the artist perspective, you have it from the business perspective, you have it from a free market perspective, you have it from just the various points that should be considered. And like we were saying, perhaps let's not rush into corrective action because it probably won't be corrective or conducive to a healthy environment. Instead, focus on a healthy conversation.
yeah, and well, yeah, and honest God, right now, I think a lot of folks just need to really sit down and realize y'all are emotionally reacting, not logically
Yes.
reacting to this whole
Yes.
like dilemma of creator fees. I'm certain that for FTX, there's a lot of people who have to grieve emotionally for loss of wealth, loss of hard work, whatever you want to do it. So
Yeah.
that is, yeah, that is, I'm incredibly fortunate that I haven't been impacted by a single one of these things beyond the material price of crypto dropping.
Right.
So I've been really hopefully fortunate in part, hopefully by my own tenure in the space, but of luck as well, whatever you want to call it.
Hmm.
Some other folks have not been. And I just want to end this at respect towards some of these were within the
Oh
confines
yeah.
of problems that you just didn't have control over. Systems risk, especially in a
Hmm.
CFI model, is incredibly opaque. Um, and
Right.
I think what SBF did with what he has done with FTT and all those things is very, very, yeah, just not good and something
Yeah, it's
I'd be
horrible.
very. It's like those kind of things really makes me like not tell people I work in crypto because it's like it's so shameful sometimes. It's
Yeah.
just like this is the kind of crap that you guys pull. It's like um
Right.
but
I will say, maybe as a parting thought here, I've been seeing a lot of tweets and posts about people saying things along the lines of like, please convince me what good remains within this space, right? And I just want to add that, like, I do think that the human nature isn't base bad. Like,
yeah,
I don't think people are all out there trying to make this space horrible for everybody. I think that just it's unfortunate that so many people are at the behest of a couple of bad actors, but maybe we have to be careful not to let this poison our worldview too much. And to think that everybody operating these exchanges is out there to try to take as much as they can and rob you of your freedoms, and your wealth. And yeah, I don't know. I just wanted to mention, like, worldview poisoning can be pretty dangerous, and
yeah,
there's a lot of people who are being deeply affected by this right now. But my hope is that they could still understand there's some beauty in this space. There's a lot of great actors in this space. This whole space exists because of a powerful philosophical movement, as we alluded to before. And the fact that we're having this conversation now is a reflection of the passion that has gotten us here. And that was good fire. And so perhaps let this be oil that fuels your fire instead of, fanning it kind of thing.
And I will even say it's like, just even to lean into that metaphor, one of the final points, like, if you're not in a mood to start a fire right now, keep the oil.
True.
Grieve, do what you need to do to be you. Some point when you're ready to light some shit up,
Good point.
Right? Like,
I love that.
I think a lot of folks, especially in cryptos, is like, shit, I just lost $10 million. What am I gonna do? I'm gonna keep hodling and building. I'm like, mate, give yourself some time to like
take a minute, breathe.
Yeah, like breathe. Right?
Yeah.
I just want to make that point. Like,
great.
We need to breathe.
Awesome.
Crypto will be around.
Yeah, it'll be around. Well, that was great, Dave. For those listening, thank you for tuning in. You can join the conversation on Discord, discord.gg/POB. We love doing these happy hours. And although we're talking internally about how we can change the podcast format a little bit, maybe make it more conducive to the healthier conversations that reach more people, we love being able to get our voice out there. And so if there are people who listen to this and you feel like you have something to add to this conversation, or you were touched by something we said, please jump into the Discord and say hi. We want to talk to you guys and see how you guys are doing. We do value our POB community. It's a great community. So with that, thanks for